Auditing Theory 101. Overview of the financial audit process. Pay close attention, for today's tutorial would make a run-through about an overview of financial statement audit process. A short review. Records of auditing activity can be traced back in early Babylonian times. Audit is derived from a Latin word audere, which means to hear or listen, because in medieval times, auditors used to hear the accounts from taxpayers. But before we proceed to the differing procedures, let us first define what financial statement audit is. A financial statement audit is the examination of an entity's financial statements and accompanying disclosures by an independent auditor. The auditor enhances the usefulness and value of the financial statements and also increases the credibility of other non-audited information released by management. And I would very much like to express the necessity for your learning to understand and to always stick to the basic concepts and principles underlying a financial statement audit. Take note of the following. Auditor's independence requires independence of mind and independence in appearance, professional skepticism, an attitude that includes a questioning mind, conduct and scope of an audit in accordance with PSA. An auditor should conduct an audit in accordance with international standards in auditing, and the scope of an audit or audit procedures deemed necessary to achieve the objective of the audit. Audit evidence and FS assertions. Audit evidence refers to all matters that supports a point or position assumed by the auditor regarding the assertions or claims made or prepared by the client. Audit materiality. The magnitude or an omission or misstatement of accounting information that, in the judgment of a reasonable person relying on the information, would have been changed or influenced by the omission or misstatement. Audit risk. The risk that an auditor may issue an unqualified report due to the auditor's failure to detect material misstatement, either due to fraud or error. Professional judgment, a key skill in preparing and auditing financial statements. And finally, to our last concept, inherent limitations, such features of audit that constrains the auditor to obtain absolute assurance. Enough for that. I am now going to take you on a wonderful journey of what an auditor really does in her work. The audit process is similar for most engagement and normally consists of the following essential stages. Pre-engagement process. Before the audit begins, the auditor performs pre-engagement acceptance or continuance procedures. Before a new client or a recurring engagement is accepted, appropriate information is gathered and evaluated as a basis for deciding whether to accept a new client or retain an existing client. After a decision is made to accept or continue an engagement, an agreement should be reached with the client, preferably through the auditor, and an engagement letter is prepared. So what is an engagement letter? It is a formal written agreement between the CPA firm and the client for the conduct of the audit and related services. Planning. This is an essential stage that helps establish the overall audit strategy and development of audit plan. Auditors seek to determine knowledge of the business. After obtaining and using the knowledge about the business, the auditor goes then to preliminary analytical procedures, a stage that is a part of obtaining an understanding of the business and helps assess the risk of material misstatement in order to determine the nature, timing, and extent of audit procedures. We then go to establishing materiality and assessing risk. In audit, materiality is clearly defined as the magnitude or an omission or misstatement of accounting information that, in the judgment of a reasonable person relying on the information, would have been changed or influenced by the omission or misstatement. Now, there are different types of materiality in an audit. Under the financial statement level, we have the overall materiality and overall performance materiality. In account balance, class of transactions, and disclosures level, we have specific materiality and specific performance materiality. Then we go to assess.
Created using Powtoon.